Welcome to Market Tea Tuesday,
where the tea is always hot.
Welcome to Market Tea Tuesday.
Yes.
We should have a tea party while we're doing this, right? If we could get some guests on here.
I think we should get like tea hats, like the really cute hats,
and just always wear them.
Yes, I'm down for that.
Well, let's get into it because it's crazy because things have really shifted. I mean, it's still a buyer's market for sure. But we've seen some major shifts. I think applications have been up, had 2% price increase year over year, which is pretty standard. We're definitely not in COVID times anymore. And we've seen rates come down a little bit, which is nice. I mean, we're definitely not in 3s and 4s that I know everybody's anticipating, but you can buy down into a 5 these days.
Yeah, I've seen that too. I've seen that on our rate sheets. And again, seller concessions have been a big thing to allow us to get into those 5s as well for our clients. So always ask for them. The worst they can say is no.
And we've seen gas prices come down, and we do know that with gas prices coming down, that we know that we'll see rates also come down. So that's some good info there.
It is.
So instead of watching the Fed rates go down, watch your gas rates go down.
Yes. Oh my gosh, why did your camera just zoom like
that? Auto zooms because it's
I'm like, why did you zoom? Okay, that was cool. Yeah, I think that's a great indicator, right? I think a while back, it was a couple of months ago, another indicator that it is considered when they're trying to figure out, like, are we in an inflation or not? Which I'm just throwing this as a random fact, but Walmart sales, that's an indicator of what the economy is doing, which I think is wild because I'm a Target girl, but hey, nothing against Wally World, right?
Yeah.
But yeah, definitely keep an eye on your gas prices because that's going to tell us a little bit of where we're going.
Yeah, and we've seen some different reports come out, and the Fed will come out again
this week.
Ironically, the government shutdown, I haven't seen a huge impact as far as rates and market, which I was expecting to see a bigger move there.
So let me ask you, because I was just asked, I think it was today or yesterday, what about tariffs? Because I know it was like this big, there was all this noise about it and how it's going to impact us and what it's going to do to the economy. What is your what is your opinion on what it's actually done and how it's impacted us here in the mortgage industry?
So it all depends on how it shifts the market, I think, is a really big thing, right? So whenever Trump comes out and says, hey, I'm putting 100% tariffs on China, well, we know that as a country, we get a lot of things from. So it's going to impact the market, and impacting the market is going to impact our rates. And so it really depends on the volatility of the market on what they're trying to do is the biggest thing.
Okay. Well, that is on pause, right?
I have to say rates are like toddlers or throwing temper tantrums, and then they come back to where they were. So it's also not the end of the world.
Right, because all that, correct me if I'm wrong, there's a pause on all this tariff increase and all that we were expecting, but there was all this noise and everyone's like, oh my gosh, go stock up on toilet paper again. So
yeah. We're in COVID times again. I think things like COVID definitely impact market rates, things like that. That's why we saw what we did during that time. But we also don't want to see that for long term because that's how we get these inflationary numbers.
Right.
So that's important to
yeah, something that I read, and I want to make sure that I bring it up because I thought it was a very interesting fact, and I think it determines how we should be marketing as professionals in the industry. Is Gen Z is buying, okay? 67% say homeownership is an important lifetime goal for Gen Z. And these are buyers that are super young and they are educated because they've Googled and they've chat GPT'd everything. So how do you foresee that, like, shifting the market?
Well, I think they're going to want their own space, and they've seen their parents buy and things like that. Yeah. So I think that is where we're really going to see those changes. But also another thing to note is that single women, especially in that generation, are more likely to buy a house than single men. And also they realize they can get roommates, things like that, and they can share that cost, because what a better time to get a roommate.
Yeah, that's true.
So
although affordability is still challenging,
speaking of that,
Mhm.
so many people will find houses that have like a little accessory dwelling unit or whatever. And I'm always like, I'm so sorry, but you can't use the rent on that to offset to qualify, but now you can. And I don't think that that little fact is getting enough attention, that Fannie and Freddie just came out and said, yes, now with an accessory dwelling unit, you can count rent. Even
As
if it's
part of your income.
Yep.
Okay, that is definitely good to know. I know downtown Sanford is flooded with ADUs, so that's good to know. So if you are an agent that focuses in downtown Sanford, do know that.
Yeah.
That fact, for potential buyers, and I don't know, maybe get that data up front for your listing too.
Absolutely.
It can attract buyers, hey, like this unit's been renting for X amount, things like that, because that can also attract some more buyers.
Yeah. No, and like we said, affordability. So they know that they can, now you can't rent out rooms in your house and count that. But also I think the big thing is a lot of people are steering away. Like new construction is saying that they're optimistic over the next 6 months, which that's always a good market indicator, no matter how we feel about builders and things like that. It's a really good market indicator. Of how their builder confidence. And right now their builder confidence is really high over the next 6 months, they're saying.
That's good to know.
So,
I mean, we
so
see
watch
it.
your gas prices, watch your builder sales. I think those are important. October has been hot, so be careful, because this is what we were talking about. Just that small dip caused a lot of buyers to come out and buy houses. A lot. So it's important to pay attention to that. And, if you need alternatives to get into a house, we can do a HELOC to get money equity out. We have bridge loans. There's a lot of things that we can look at to help you get into another house or move or, sell, buy before you sell, things like that.
Yeah. So HELOC, I mean, it's such a great tool. And I think a lot of people can benefit from it because they're able to go into their offers without it being contingent on the sale of the current home. And we have a HELOC there's no prepayment penalty. So it's a great option for us to be able to offer that to our clients. So if that's if not having access to your funds, or you're trying to hold yourself, you're holding yourself back on submitting an offer because you need to sell first and you don't want to go in as a contingency, definitely reach out, because there are options and we're more than happy to go ahead and strategize with you.
Yeah. And we're here for you just to talk through things, make sure everything's feasible, and give you any information that maybe we didn't touch on here. So I hope that everybody has an amazing week.
Yes. We're already Tuesday. It's done. All right.
We'll see you guys later. Thank you.
Bye.